Now, I got asked a really good question by one of our members that's part of LPP, and it's as markets hit pretty much all-time highs, how is it that we should react, right? With the Federal Reserve recently pivoting, I came across this article that quoted Warren Buffett. I thought it would be something that I could share with you guys, where it really highlights three main focuses for Warren Buffett in a moment like this. So let me go ahead and start sharing my screen and let's jump right into it. So it says Warren Buffett's $277 billion warning that the stock market could be headed for trouble. So let's go ahead and break this down very quickly. One of the things that I want to highlight is Warren Buffett has not been an investor to stray away from completely not being invested in any stock. It's just the way that he approaches this is, I would say, a very hybrid approach, especially as markets are reaching all-time high. For those that are a little bit newer to the market, this is QQQ, which is the NASDAQ ETF. And as you could see, markets are nearly at all-time highs. It wouldn't be much of a surprise if they continue to uptick, especially with inflation report being released this upcoming week. You can see that QQQ's previous highs are 502.81. We're currently sitting at 487, so definitely not far from it. And for those that like to focus a little bit more on the S&P 500, a more popular index, pretty much we're right there. Previous all-time highs are 574 for SPY. We're currently sitting at 572. So again, very close to previous all-time highs, pretty much sitting at all-time highs. And the reason I bring this up is because Warren Buffett has this very notorious quote of be fearful when others are greedy and be greedy when others are fearful. Now, there is no question that there is a lot of greed right now in the market. No question about that. But with that being said, that doesn't mean that the market has to pull on back. Markets can continue to uptick, especially as the Federal Reserve recently announced that they're pivoting, right? They went from raising interest rates to now cutting interest rates. So markets can continue to uptick. And again, one of the reasons that I wanted to highlight this is, Warren Buffett is not straying away from not being invested. He's just sitting in a really large cash pile of $277 billion that's not necessarily invested in individual stocks, but he has it invested in US Treasuries. And this is such a large dollar amount, the most that he's ever been invested. And again, this thing breaks it down. Fast forward to today, Berkshire Hathaway's cash pile, including cash equivalents, and short-term investments in U.S. Treasuries stand at a whopping $277 billion. It's by far the largest cash position for the conglomerate ever. Now, the thing that I want to make sure we highlight is, although he might be taking a very conservative approach, that's always been his focus. And I thought that what this article shares of what investors should do is very well said. So first, Warren Buffett hasn't panicked and sold all of his Berkshire Hathaway stock. So if that's a question you've ever been asking, should I sell everything and then just wait for the market to crash? Well, no, because we can't predict the future, right? Markets don't have to pull on back right now. They can continue to uptick. So I think that was very well said, where he hasn't panicked. He hasn't sold all of his stocks for Berkshire Hathaway that he owns. The conglomerate still has positions in 43 different stocks and 2 exchange-traded funds, ETFs, worth about $313 billion. So his dollar amount invested is still much greater than his cash pile. And this is one thing that I always talk about with my LPP team, and it's knowing how to manage your position size. It doesn't matter if you trade with $1,000 or $1 million. 100% is 100% of your account, right? And if you're someone that understands that hey, market's approaching previous all-time highs, we might continue to uptick, so I still possibly want to be invested, but maybe I don't want to be super aggressively invested just in case the market does pull on back. I'm able to take advantage of those good deals. And I think that was very well said, where he's a little bit more in than 50% of what he has access to, right? So he has the ability to be invested right now with $313 billion, but also has about $277 billion in cash. So again, something that I think is very important to note when it comes down to that. Second, as previously mentioned, Buffett has a really large cash position. This will enable him and Berkshire Hathaway and other investment managers to buy high quality stocks at a discount when the stock market does pull on back. So it's kind of the best of both worlds, which again, I think is very well said. I mean, I try to say it all the time. I've always managed your position size, but me saying it versus Warren Buffett saying it is, again, there's levels to this, and there's no question that Warren Buffett, not just speaking about it, but doing it based off of how he's invested. He's about 50 to 55% invested from what he has available in cash and what he actually has invested in the market, from the 313 invested to the 277 in cash, right? And again, when asking that question, if you wanted to emulate him, then it doesn't matter. Remember, if you have $1,000 or $1 million, he's about 50 to 60% invested right now. So it's something to note that no, you don't have to panic sell. You shouldn't be scared of being invested as markets do continue to uptick, as they 100% can. That's one of the worst feelings of the FOMO, knowing that markets are continuing to uptick. It's just knowing how to manage that position size. And again, the big focus that he has is in case markets do pull on back, he still has some exposure, right? The $313 billion, but he is very selective, right? He is invested in good quality companies. And if they do sell off, like he said many times before, he can't predict the future, but at least he has cash on the sidelines where he's able to buy these companies at a huge discount. Therefore, when markets do recover, as markets are more bullish than bearish long term, then that is a great opportunity and position to be in where he can take advantage of it. And then third is still buying some stocks. However, he has only invested in stocks that meet his criteria, which notably includes attractive valuations. So again, if you wanted to follow in his footstep, is he's not someone to stray away from when an opportunity does present itself that meets his criteria, either as, you know, an investment or for you and I, maybe as a trade, that you shouldn't be afraid to take advantage of it, even if markets are at all-time highs. As long as our criteria is met, and that's dependent on what it is that you're looking for. For myself, again, making sure that direction is in your favor, making sure that risk to reward is applicable, and making sure that your golden ratio is met, that the profit potential always outweighs the downside risk. And that's something that we always highlight. You should never be afraid to take advantage of an opportunity as long as the deal actually makes sense. Just like real estate, just like the market, and just like buying anything. Again, it's all about the deal and it's all about the opportunity. So that's going to be very important to note, as this upcoming week we have the CPI data report. I do plan to live stream it on my YouTube channel, and again, this is where the Federal Reserve, I'm sorry, not the Federal Reserve, this is the Bureau of Labor Statistics, will announce what the actual inflation rate is based off of current expectation. So as of right now, if we're not mistaken, we currently have a 2.5% rate of inflation, and we expect to be right around 2.3%. So again, we expect a solid drop. If the market doesn't see that drop, will markets sell off? Or if we do see that drop, will markets skyrocket, right? This is something to pay attention to, and there's no reason on why to predict. This is why we go live, we watch the market react together, and we can digest and break down that CPI data report. And if you're an absolute beginner and you've never tuned on in, it would be a great live stream for you to be able to watch it live. And also, I break down that CPI data report, which is a little bit challenging for someone that might just be getting started, but I can reassure you that if you tune on in, it's going to be a lot easier to read. It's just, again, takes time to get used to. Other than that, just wanted to share that article with you. I thought it would really answer the question of, should you sell everything? Should you panic? And I think that was beautifully said, not just by Yahoo Finance, but of course quoting Warren Buffett on how he's currently being invested in the market. If you have any questions, feel free to comment down below. Let me know down in the comment section what you plan to do for this upcoming CPI data report. And again, do not forget to tune on in, so make sure you subscribe to the channel. And if you ever want to watch me trade live, that is going to be that second link in the description down below. I trade live every single morning right at market open for about 30 minutes to 1 hour. It's a great experience for absolute beginners, and I would love to see you there. Like always, let's make sure that we end the year on a green note. Take care, team.